All right, let's talk about a number. A number so big, so mind-boggling that it almost feels fake. We're going to dive deep and try to make sense of the $300 trillion mystery of global debt.
There it is, $300 trillion. Just let that sink in for a second. That's pretty much all the debt on planet Earth combined, from your credit card to your government's bonds, all of it. And it's a number that you see in headlines all the time, specifically designed to make you a little nervous.
And you know, those headlines work. You see a number like that and you can't help but ask this exact question. Are we all just living on borrowed time? Is the whole system about to crumble under this mountain of debt? Well, in this explainer, we're going to figure that out.
So, let's get into it. What does this monster of a number really mean for you, for me, for all of us? We've got to break it down.
Okay, so if we took that entire $300 trillion pile and split it up evenly among every single human being on the planet, that means you, me, everyone, we'd each be on the hook for about $40,000. Now, here's the kicker. The average value each person produces in a year is only around $10,000. So, yeah, on the surface, that looks really, really bad, right?
This brings up a really simple but kind of profound question. If the whole world is in debt, who exactly did we borrow all this money from? Who's the lender?
And this is where it gets really interesting, because the answer reveals a paradox that completely changes how you should think about this.
You gotta love this quote from an economist because it just perfectly and hilariously sums it up. We aren't getting loans from Mars. There's no intergalactic bank lending money to Earth.
So here's the absolute key to the whole thing. We owe the money to ourselves. See, on a global scale, it's a closed system. Every single dollar of debt is also a dollar of wealth, an asset, in someone else's pocket. A government bond, that's debt for the government, sure, but it's a super safe asset for a pension fund. Your mortgage is your debt, but it's an income-producing asset for your bank. They cancel each other out.
Okay, so if it's all just one big IOU between all of us, why do the headlines make it sound like the end of the world? Well, it's because the way we usually measure it is, frankly, pretty misleading.
You hear this all the time, right? Global debt is 3 times the size of global GDP. But think about what that's actually comparing. It's like looking at your entire mortgage, the stock of your debt, and comparing it to just one of your paychecks, the flow of your income. Of course, the mortgage is going to look terrifyingly huge. It's a scary comparison, but it doesn't really tell you if you're financially healthy or not.
Now, this chart gives us a much better perspective. Instead of just comparing debt to 1 year's income, let's put it next to our total wealth, all of our stuff. So you see global GDP here at about $100 trillion. Then there's the debt at $300 trillion. But then look at this last bar, total global assets. That's things like real estate, stocks, infrastructure, everything. It's worth around $1 quadrillion. Suddenly, that debt doesn't seem quite so big, does it? In fact, if you do the math, you take all the world's assets and subtract all the world's debts, you get our planet's total net worth, $700 trillion. The bottom line is, as a species, we have never been wealthier.
So this completely changes the conversation. The really important question isn't how much debt is there. The real question is, what are we doing with all that borrowed money?
And I love this analogy. Think about it this way. You could borrow money to buy a delicious plate of pasta. You eat it, it was great, but now it's gone. That's bad debt. It's just for consumption. It creates nothing for the future. Or you could borrow money to buy a pot. With that pot, you can now make more pasta forever. That pot is a productive asset. That is good debt.
So obviously the smart move is to use debt to buy more pots, right? Things that grow the economy and create future value. So where is all this borrowed money actually going? And this chart, this reveals the hidden danger in all of this. A pretty small chunk of global debt, only about 35%, is going into buying productive pots like new factories or R&D. The vast majority, 65%, is flowing into non-productive assets. And the biggest one by far is just speculation in the real estate market.
And that is the real risk we face. See, when you borrow $1 million just to bid up the price of a house that already exists, you haven't made the country one bit more productive. You didn't build any new pot. All you did was make that house more expensive, which in turn makes it harder for new businesses to start and for regular people to live. It just fuels asset bubbles and makes the whole economy much more fragile.
Okay, so let's just quickly recap the main takeaways. 1, the world owes its debt to itself.
Every liability is somebody else's asset. 2, our total global wealth is way, way bigger than our total debt. And 3, this means the quality of our debt is so much more important than the quantity. The real danger isn't the debt itself, it's what we're using it for. Are we investing in productive pots, or are we just making the pasta we already have more and more expensive?
So the next time you see one of those scary headlines about that $300 trillion number, you'll know the right question to ask. It's not, can we ever pay it back? The answer to that is yes, because we're just paying ourselves. The real question is this: is all that borrowed money actually being used to build a more productive future? Or is it just making life more expensive for the rest of us? That's the mystery we really need to solve. Thanks for tuning in.